All right, guys, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
Today, we're going to talk about a little bit of an inflation update. It's kind of a big time period right now for inflation. The Federal Reserve December meeting is ongoing as we record this video. This is December 14th. They're actually going to conclude the meeting tomorrow, so that'll be the big day as far as statements go and how the Federal Reserve addresses inflation going forward. But I wanted to hit a couple news articles about it and talk about it.
And if you like this kind of entertaining stock market content, where it's two stupid guys trying to figure everything out, give us a like and subscribe.
With that, we'll get to it.
Two stupid guys trade stocks.
All right, so this is the CPI. This is the headline number that was in the news articles over the past few days. Came out, I think it was last Thursday or Friday, 6.8%.
That's low, right?
Yeah, really low compared to this baseline graph. Just look at it right behind your face there. So all of a sudden it spikes up. It's kind of going into a QRS complex for anyone out there that works in medicine.
It's funny. It's like the opposite of my portfolio.
Yeah. That's I mean, that's what happens when you try to short the Qs and TLT puts.
It worked today.
Yeah, exactly. But so this is what the headline was. Like I said, 6.8%, highest rate since 1982. 40 years basically is how long it's taken us to get back to this level, which is pretty insane. Yeah.
Okay.
There it is in visual without Dylan and I's stupid face over the front of it.
But so yeah, what is this? What's this dip here?
That right there would have been the 2008 recession, the Great Recession as they call it.
Interesting.
Yeah. You know what's funny though is back up for 1 second. Dylan, I don't know about you, Dylan, but I was born back in 85, so this is the highest level of inflation in my life. If you think about it from that standpoint.
Oh, that's fair. I'm right around this area, so I experienced this technically.
Yeah.
I don't know if I didn't know what was happening, but
yeah, the formula went through the roof, and Dylan didn't know why.
No.
So Lawrence Summers here actually was a former head of the Treasury, and he came out, and I thought this was absolutely blindsided me a little bit, saying that the Fed should raise rates 4 times next year. This is an interview he did with Bloomberg here. Do you think about 4 interest rate hikes next year?
Well, let me ask you a question here, Vinny.
Sure.
How is that going to affect my TLT puts that I've had? I still have 14 months of expiration on those bad boys.
Well, I would tell you that since the return and the price are kind of inversely related there, that they would be potentially good for your TLT puts. Potentially.
Interesting. So you're saying double down all my money?
No, that is not what I'm saying. I'm saying good luck.
I heard double down on it. Sell my Fubo stake. Do that. Got it.
You're fighting Jerome Powell and his printing press. The meme of Jerome Powell.
I'd win in a fight. No problem.
Yeah, I believe it. Especially if this Omicron thing keeps up and they have to go back into QE of some sort. Yeah, don't even want to think about it. All right, next slide. So it's been a while since we kind of looked at this chart, but I wanted to take a peek at it again. This is the money supply, M2 money supply. Still beautiful, nice upward trajectory there. If only our portfolios looked the same way. This is the amount of money in existence. This is that Jerome Powell printing press.
This is where that stat comes from, that 90% of money or whatever was printed in the last 3 years or so. I can't remember the exact stat, but it's a lot.
So. Yeah, exactly. So and then this is kind of the other side of the coin, right? Because inflation only really counts when it's moving through multiple hands. And as you saw during the pandemic, this is money velocity. It just drops right at the bottom, right? Because money wasn't moving. People that were doing well were just throwing into the stock market. The average kind of checking balance for the American household has never been higher. People eliminated a lot of credit card debt. A lot of the good things in that sense happened. But the amount of transactions, money has kind of come to a halt, and it hasn't really improved. Actually, that's the surprising part to me.
Yeah, what's interesting is also this has been trending down for some time. But what's crazy is, so the shaded part is recessions.
Yeah.
Right. So figures that we would live through the quickest recession with the biggest drop ever. Right. Look how tiny this little gray area, it barely registers. And it's this entire drop. I mean,
Yeah.
look at these giant gray lines where they, it took like 3 years and the drop is like 10%.
I would argue that, yeah, this recession was largely different in what motivated it, though. This is the first one of those that's been caused by like worldwide pandemic, right? And there was
I
lockdowns.
I thought COVID-19. I thought that meant there was 18 other COVIDs.
No, that's the year it was first isolated in, Dylan. But this is
There's actually a lot of people that think that, by the way.
yeah, this is an interesting take. I actually hadn't considered. So SARS-CoV-2 is the name of the virus. Okay, by the way, two as in there was only one before. But have you ever heard of TIPS? These Treasury protected bonds that you can buy from the federal government?
Vinny, I still can't really explain to you fully what a bond is. So no, I have not heard of TIPS.
Yeah, well, this is if you wanted to park some cash and earn about 7% right now, you could do it with this. There's a limit of $10,000 per individual per calendar year, but this article is basically saying that you could buy, for a couple, you could buy $20,000 this year and then $20,000 in January 1st, and still be acceptable as far as the rules go.
But why make 7% when I can lose 10?
I mean, what kind of math like that is why people subscribe to our channel. I think that's exactly.
I'm just being real, man.
The alternative is you could take some, not Michael Burry, not financial advice. I mean, look at the 30-year mortgage right now. Like, did you get under 3% or around 3%?
For the mortgage? For my mortgage?
Yeah.
No.
Oh.
I'm at a bad interest rate because it was during the 2-week spike where it went up 8 points in a 2-week yeah. Imagine my bad luck. It was, had I closed 5 days earlier, it was a full 0.8% difference.
Wow. That's insane. You might want to refi before. So this is what the timeline is looking like right now. We're going to see what gets announced tomorrow. But a lot of people, I would say the majority of financial experts are calling for QE to be done as of March of 2022. And the first rate hike will come in June of 2022.
Okay.
So that's your kind of window where it would be after that point, it's unlikely that you'll be able to get a mortgage in this 3%-ish range anymore, I would say.
Yeah, it was really frustrating. It was literally 5 days before, but the problem is the market I'm in, you can't wait. Otherwise, you just lose the house. I was looking for a house for like 2 months and they were all crap until I found this one. So.
Yeah, it's tough for sure. So this is that not financial advice from Burry. We actually dug this up. This is from a while ago, but definitely an interesting take on battling inflation by taking this. Not advice exactly, not advice. But taking that.
I mean, that's pretty solid. So you could essentially, because money's so cheap, you could just take out a loan on your mortgage and put it into dividend stocks. Is essentially what this is saying.
Yeah, to a degree, I wouldn't put it so one-sided. I would say that if you were prioritizing where to allocate your capital, I would say allocate less towards the down payment and more towards investing. If you think about it from that standpoint, rather borrow more and use my investments to earn more than 3%.
I would agree.
Yeah. Oh, yeah. This is interesting. So it was someone had reached out to Burry. I found this incidentally when I was looking for something and asked about some books to recommend. And two of the books he recommended here, both Liar's Poker and When Genius Failed, are actually in another video that Dylan and I filmed that will be coming out this week. So stay tuned for that one.
It's pretty cool. It's they were all pretty genius, and man, did they fail.
Yeah. I think it's a good way to kind of look at the psychology of Wall Street. So Bill Ackman here, right? This multi-billion-dollar hedge fund aficionado, financial aficionado, I guess, if you will, talked about how although that 6.8% number seems like rather high, it's actually missing a lot of inflation. Yeah. So, this kind of gives you a backstory talking about how roughly 30% of the CPI is used to estimate like your home expenses. That's part of the basket there of goods that the CPI tracks as far as cost. Now, when you look at the actual increase in terms of rental over the year, you're looking at actually, he said his group estimates 17% year-over-year increase in terms of rental home prices.
Rent prices they're pretty ridiculous right now.
Oh yeah, for sure.
Pretty well.
I mean, we can talk more about that. We actually probably do a separate video about the supply demand like imbalance in terms of housing in the United States. That'd be an interesting video. Obviously, it's very regional, but overall, there's some interesting data. But if you factor in this true, according to him, number as far as rental increase, the CPI would actually be 10%. Yeah, I know, 10.1% rather than 6.8. How do you like that?
So is this why Jerome Powell went from "we're not ready," like well, 1 month before, "we're not ready to cut off the printing press or start buying back the bonds or anything like that"?
Yeah.
Or I would not buy back, I guess, but slow down the buying.
Slowing down.
And then 1 month you'd be like, yeah. And then like 3 weeks later, we need to stop immediately.
Yes.
And they're like it's 6 months, 1 month.
Yeah.
We need to stop.
Yeah, exactly. I mean, it's tough. I get it, especially right now. Like, I feel we're in an interesting position where we have this kind of variable of that Omicron variant, and I've been following some of the stuff out of like the UK and Sweden and Israel, and from it's not the point of this video, but it definitely has the potential to dramatically impact kind of inflation picture on a system-wide basis. I'll leave it something vague like that, if you get what I'm trying to say. Do I think that's gonna happen? Probably not, but it's enough of a wild card that it's hard to accurately predict.
Well, that should be a whole separate video, because we could talk about like kind of what Omicron was supposed to be, and then it's not as bad as we were thinking, but it could have other economic issues.
Yeah, exactly. There's I can't remember the name of the YouTube channel, but there's a doctor from the UK that's been tracking it and does a really good job breaking down in his videos, at least in my opinion. It's worth putting on and like sitting in your car while you're driving.
Nice. All right, dudes. Well, let us know how inflation's hit you. It screwed me over for my house for the mortgage rate. Oh, that wasn't really inflation. That was just bad timing. But.
Yeah, well, I mean, it'll be interesting tomorrow. See what comes out of Jerome Powell and what he says at the end of the Fed meeting. That's the big one.
Yep. All right, guys.
All right. Catch
Have
you
a
in the
good
next
one.
one. Yep.